Good day, folks. This is phase 2 on the discussion of foreclosure of your 2013 Illinois unredeemed tax liens. If you have not watched the first broadcast, which details all of the processes of this, I would invite you to go back and watch that initial broadcast. Let's go ahead and get started. Okay, as I promised at the end of my last broadcast, that future broadcasts on this topic will be a lot shorter, just as we kind of click through the processes that are involved with the Illinois tax foreclosures. So what I'm going to do, I'm going to include a few reminder slides from the initial broadcast. I won't speak in them. You can pause them. You can skip them as you want, so we can keep this a little short. So this will be the only one I actually speak in as we go forward. Okay, so what have we been up to since we initiated this process back in November? We've been up to a lot, actually. We've ordered all the photos and assessments. We've been loading all of this data into the database for your review and your approval, so we can take those next steps. We've also been doing a lot of background work on the collateral assets, so we can make good recommendations for you. Whether it's occupied, that sort of thing. We've also been identifying potential causes for sale and error. As I mentioned in the first broadcast, the property we purchased at a tax sale in 2013 might not necessarily be what's on the property in 2016. It could have burned down, they could have vandalized it, a lot of things could happen. So we're looking for causes for sale and error to just basically get you out of the lien, get your money back. We've also been auditing all the counties for redemptions that they have not yet paid. I'd like to make a note of this, that we actually do this process all the time anyhow. We do a quarterly audit of every single county and every single year that an investment is made. So it's a process we always do all the time, every quarter, but we do a more thorough and deeper audit of just this particular year when we reach this phase. We've also been contacting property owners to encourage redemptions. You guys may have noticed redemptions have probably picked up slightly because we're doing a lot of things behind the scenes, mailers, door knocking, that sort of thing. And then we're also setting up payment plans for property owners. That basically means, and this is unique to us, and it's something that happens behind the scenes on a lot of liens. Homeowners might not be able to pay the full tax in full, which in the state of Illinois, that's the only way that they're able to pay them. So what we will actually do is we will set up payment terms for them, and we manage and process all of those payments until it's paid in full, including all interest, all penalties, and then we pay you. So we're setting those up as well. So that's ongoing process that goes on for it can go on for a couple of years. But what it does is it kind of gives you an assurance that that lien is actually going to definitely be paid with all penalties and interest at some point. Okay, so now to the fun stuff, the Harbor Dashboard. The Harbor Dashboard is our ongoing creation of a new database that will be user-friendly for our clients and cover every possible question or concern you could have. What you're looking at here is the home page, if you will, of the Harbor database. And you can do a lot of different things in here. You can click on these pies and it'll open up what liens have redeemed. You can hover around these charts and find additional data on what the lien was, how much you paid for it, what the interest was, what the annualized ended up being on that particular lien. Anyhow, there's a lot in this that you can now sort of play around with and really analyze your investments. So I encourage everybody to just kind of play in your Harbor database and see all the functions that it now has. Okay, so as we continue, if you scroll down on that home page, if you will, you'll find more graphs that you can actually go into and kind of highlight and click through. That's going to give you a lot of information. It's all new, so just again go in there and play around. So we're going to keep going on with selection and looking at the properties that we have done the assessments for. So what you're going to do is once you get into your home screen, you're going to go up to your taskbar here, and you're going to click on parcels right here. And once you get into parcels, you're going to see this screen. And pretty much through every screen, you're going to have the option to ask a question. If you just click on questions, it will essentially just pull a window open, ask the question, and it's going to shoot that question to somebody in the office. Me, Lena, Lee, Zach. Somebody's going to get that question immediately and will be able to respond via email. Also down here, because this is an ongoing project, you have the option to report a problem. It could be a bug in the system. It could be once you get to the photos, they're not loading properly, something like that. And what that will do is that will automatically shoot it to our IT folks so they can fix the problem for you as quickly as possible and accommodate what you need. So once you're in here, we do have clients obviously that have multiple accounts. So once you get into this, what you have to do again is you're going to actually click on the particular account name, which is going to be right here. All right, so once you've clicked on your account name, it's going to open up this page here, which is going to be your portal to all the details behind each collateral property. So as you can see here, you have your certificate number, your initial principal invested, the rate at which you purchased it for, the non-postable fees that will be required for foreclosure, and then obviously the postable fees. So on this page, what you have is you have a good snapshot of essentially everything that's in your account. You're going to have everything that we are suggesting for foreclosure. You're going to have things that have already been engaged, which have been, as you can see here, redeemed. You're going to have items which we may suggest as a 50-50. That is where you're essentially partnering with PIP on the foreclosure. We discussed that in the first broadcast. Then you're going to have sale and heirs and a couple other categories down below. So essentially what we're looking at is up here, you can see that PIP has recommended these two particular properties so far. This is an ongoing process. So as of right now, we've highlighted these two. So to go take a look at this and see what the notes are and the pictures behind the property, you're just going to click on the address. Very simple. Click on the address and it's going to take you. Okay, so you've clicked that link on the address, you've opened up that page, and this is what you're going to get here. It's going to pull up the certificate number, the parcel number, the investment date, all the criteria that's essentially in your current investment summary reports. And then the important one here is we're going to show back taxes, and we're going to have notes here. The notes are going to be a combination between drive-by assessor notes as well as our internal assessment notes. So they'll actually just do the snapshots quickly, they'll do a quick assessment, and then we actually go back through and do additional research and digging into the actual property and the activity. So we'll have those notes here. So as you can see on this particular property, you've got the aerial and then a couple of the properties itself. And in a lot of cases, what we ask them to do is take a picture of the actual house number, so we can confirm that they're taking the pictures of the right properties. And as you can see again, you can continue throughout this entire platform to ask questions or report bugs. Up here, you've got a section that's going to be invoices and docs. Docs is where we're going to eventually plug in the title reports as well as any documentation related to the foreclosure status or the process of the foreclosure. So, from time to time, you'll be able to go in there and actually look and see what's going on and how the progress is going, and all the fun, fascinating paperwork that is involved with tax lien foreclosure in the state of Illinois. Invoices is a works in progress. Again, this is a new database that we continue to build onto and make user-friendly for our investors. Eventually, invoices will land in here, and you'll have the ability to pay them straight through the website. Right now, just for sake of being expedient, we're still going to send you your invoices by email or by snail mail. But again, it's works in progress. You might find them in here, you might not. Either way, we're going to send them to you. So also from the screen, you're going to be able to highlight on the picture and expand the view. In some cases, the pictures may be taken across the street because the property is occupied, and if you want to get a little bit closer of a look, and see if it looks like it's occupied in those windows, you can obviously. Okay, so this is where you guys actually participate and get involved in the next steps. If we've recommended something foreclosure and you disagree, you can uncheck it. You can either do that in volume or by each property. What we're looking at here is by each property. Now you can actually see that we're logged in as me. So your dashboard, your screen is going to look a little different than this one is. You're not going to have some of these tabs to look at, but the important one to look at is active. So you're in here, and let's say we suggested this one for foreclosure, which we have, and we've clicked on it that we want to engage. So you don't want to engage. So what you would do is basically just click engage to reverse our engagement. Or on the flip side, maybe you don't want to engage it. Maybe you want to go 50-50 and partner with PIP. So all you're going to do is click 50-50. So it's very easy. Some of these are not going to show up in your menu bar either. They will show up in hours. So things like sale and heir, redeemed, payment plan, those you will not see. And so you've got other selections such as do nothing at all, which is NAT CT. But here's where you're going to engage. You're going to click what you want to do, and it's automatically going to update the system, and it's going to. Okay, so you guys have probably noticed on both the prior example slides, you probably noticed the market values of the properties were really low. And I've done that intentionally to more or less give you guys a worst case scenario on how this process works. I like things to be illustrated, so I'm going to illustrate everything for you. Here we have a property that is going to be kind of ho-hum scenario with regards to successful foreclosure. So again, up here we have the original certificate number, we've got the initial lien purchase price, what the rate was, and the back taxes that are due as of today. Now, obviously, those are going to go up considerably. Again, this is a screenshot from my dashboard, so yours is going to look a little bit different, but here you can see some property information, our pre-inspection reports, when we completed them. Your screen will look a little different, but this information will be in there as well. And then the payments for non-postable and postable fee deposit. So those have already been calculated, and that's thrown in here. So let's take this particular property and assume almost worst case scenarios. So the foreclosure cost on this is $4,953.20. How I came up with that number is I essentially just took the lien purchase price, I multiplied it times 5. Remember in the initial broadcast I said foreclosure costs could be as high as 8 times the initial investment cost. So we're actually going a little higher than that on this one. So back taxes, we know right now they're $3,002.03. Again, I'm shooting for the moon here and saying let's assume that's going to double by the time we get through the foreclosure process and it's time to pay the back taxes. And then finally, let's assume that PIP fees over the course of 3 years, you've spent $2,000 to us in management fees and acquisition fees. We all know that is a very high number for a $990 lien. But again, we're pitching out their worst case. So the total investment assumption here would be $12,953.20. Now, when you look at the description of this property or you look at the pictures, you say, hey, it's going to need a lot of work. It's occupied. I'm going to have to deal with eviction. We're going to have to go down all those dirty roads. I live in South Carolina. I don't want to do that. And that's the wrong way of looking at things. First of all, that's why you hired PIP in the first place, is to handle the dirty work for you. Secondly, this is a cash flowing property. As soon as you take the deed to it, it's already going to be cash flowed. The occupant is likely not. Okay, so continuing to be very over the top on this example, let's look at the expenses here. So your total investment at that point to get through the foreclosure process was $12,953.20. Let's then say that you're keeping the occupant in there, but you want to make a few repairs to keep them happy. So you put another $3,000 into it. And let's just say I'm calling it vacancy. So you can apply this to properties that aren't occupied. But let's say the vacancy is going to be $800 on this property. That's 2 months. I'm saying that this thing's only going to rent for $400 a month. So again, I'm being very extreme on my estimates here. And then the taxes are $750 a year. So that gives you a new total of $17,503.20. And now we have a property value, as you saw from the previous screen, of only $26,000 on this property. So you're going to say to yourself, hey, Charles, what the heck? I'm not going to invest in this. After agent fees and your performance bonus, we're not going to make anything. And that is absolutely positively the biggest mistake a lot of our investors make, is they look at this and they take these traditional ideas and apply them here and say, you know what, I'm not going to be a landlord in Illinois. I live in South Carolina. If I flip this thing, I'm not going to make any money. So this is a bad deal for me. Wrong. Let's take a look. All right, so let's take a look at the expenses versus the cash flow on a rent scenario. And again, we're keeping in mind that I've really exaggerated the numbers here. And you look at the bottom line and you say, whoa, Charles, 19.42%. That's below the PIP performance average of 24%. Well, yes, it is. But I'm giving you extreme scenarios here, as well as inflating the numbers as far as expenses are concerned rather greatly. Odds are this property is actually going to perform a heck of a lot better than 19.42%, but that's a great return on a cash flowing passive investment, no matter how you look at it. However, I know our clients, they want that 24 or higher. So if this rented cash flow isn't good enough for you, we've got another option. I'm just trying to illustrate again that there's a lot of ways to skin this cat and maximize the return, and it shouldn't be looked at as a buy and flip type of situation. There's a lot of opportunity here that you need to consider when you're evaluating your property's foreclosure for foreclosure yourselves. Let's take a look at what this property would be under a contract for deed situation. All right, so something that a lot of our investors don't know about or have not heard about is the number of contracts for deed we actually do, which is great. We have investors that are actually just interested in contracts for deed, and what makes them so great is the returns get higher, and you don't have to deal with the headaches of vacancy, repairs, taxes, etc. So here we have the same house with the same expenses, which again is going to be exaggerated because now we don't have any repairs. But let's just assume it was a vacant property, so we made a little bit of repairs so we could get it occupied and do a contract for deed on it. So we're going to leave the repairs in there. We're going to leave the vacancy in there. We're even going to leave the taxes in there, even though the taxes become the responsibility of the new owner. So we're leaving the total at $17,503.20. So let's assume we sold this property for $24,000 to our new owner occupant. So we knocked off a couple thousand from the county's valuation on it, and we're just pushing this thing out at $24,000. We're going to do a contract for deed on that at 12%. It's basically considered like a hard money loan. So the monthly payment on that for a 5-year term is going to be $534 per month, or a gross of $6408. Fees to PIP on that amount each year would be $961.20. That gives you a cash-on-cash return each year with interest of $5446.80 for 5 years, or a consistent 31.11% return each year on your investment until the home is paid in full. So you're essentially clearing about another $8,000 in interest by doing the contract for deed. So here is just, again, we're taking very inflated numbers and giving you a very conservative outlook of how those can be turned around. Quite honestly, the total investment into this property is probably going to be closer to $14,000, and rents are going to be a little higher. The actual property value is going to even be a little higher. But the point is, when you look at these, don't look at it as saying, oh my gosh, it's only worth $15,000. It's going to cost me $10,000 to foreclose on this property. That is absolutely the wrong way to look at it, and we see so many great potential deals go by the wayside because that's just the common thinking of a lot of investors. You have to look at the other ways that we can creatively market and sell these properties and really maximize the return, and I've just given you great examples of how we do that. And we do this every day, folks. That's the other important thing to understand, is that we don't just do this for individual investors. We do this for institutional guys too. So this is not something that's going to be, outside our wheelhouse. This is what we do all the time. So that's something to keep in mind. All right, this is where some of our investors get a little lost. So you might want to just pause and kind of scan through this real quick before I get started talking. How non-postable fees are calculated. They're calculated now based on a percentage of your profits if it were redeemed. Laws changed a number of years ago because a lot of tax buyers were taking advantage of a loophole in the system that essentially allowed them to charge $6,000 for the professional fees on a tax foreclosure. They basically were just taking advantage of the system. So what legislation did was they changed it and they capped it to $150 in professional fees, which is a bit extreme and very low. What this did to our investors is it really put them in a jam because they wanted to foreclose on a lot more of their potential investments, but if it were to redeem in that process, it could potentially cost them a loss of principal. So what we've done is we've hired our attorneys on a salaried basis, and that enables us to spread the cost throughout the year and enables investors the confidence to be able to foreclose on whatever they want without having to consider the loss of principal should it redeem. So rather than a flat fee, it's based on a percentage of what the profits would be should it redeem. So as an example, lien cost of $1,000. If you had a penalty bid of 15% when you initially bought it, once we get to the foreclosure processes, that's actually going to be 15% times 6. So what we do is for the non-postable fees, we charge 15% times 5. So that way, if it redeems, you're actually making something still. So on a $1,000 lien, your non-postable or your professional fees would be calculated at $750. I just want to let everybody know that that is 50% less than any other fund, large investor, institutional type investor pays to foreclose in the state of Illinois, or for the most part, any state. Most costs are between $1,800 and $2,200. So just want everybody to know that we are keeping the costs very low by using this strategy to be able to foreclose on liens. So if it were deemed, as I mentioned, you'd have 15% times the total compounded rate, which would be 6% times $1,000. That's going to be $900. So again, rather than the flat fee of $1,500 for an uncontested foreclosure, where the client could lose $600 on a redemption, the client will actually preserve capital and be able to still come back with a little something. It's not great, but at least it enables you guys to take the handcuffs off and really consider what you want to go for. You'll have to forgive me, this slide's a little old. I like to use fairly recent examples, but essentially it all works the same. This just illustrates a little better how the postable and non-postable fees work. This shows you the total fees that were posted to the redemption. So the original investment was $2,042. It was obviously a lien that was bought at 18% originally, so it redeemed at 108%, giving you that subtotal, and then the total fees that were posted. $1,594.02 is what was paid towards the postable foreclosure cost to foreclose on this lien. And you can see there's 3 that actually redeemed on this particular spreadsheet, but I've highlighted just one of them for you here to look at. All right, that's it. Simple, simple, simple. Everything is in there. Literally, you can do all of this by push button, and we will take it from there. If you have any questions, like I said, you can ask those through the Harbor system. You can give us a call. We will be following up by phone regardless. So take your questions down, and when you hear from us, by all means, you can ask them. But we are obviously pushing to get this this going as quickly as we can. The sooner we can get started, the less hassles and headaches we'll all have to experience because we're pushed to such short deadlines. We're doing a lot of work behind the scenes that you don't see. I think I've highlighted those pretty well for you, but now it's time to make those new decisions. We are not pushing the deadlines just yet, but we have a lot of work that we have to do to be prepared for those deadlines. So please don't put it off. Please get into the Harbor systems. Take a look at the photos. If you have any questions or any concerns, we're just a phone call away. So we look forward to working with you. We will look forward to continuing to build on your investments, and I hope the examples help illustrate how a very small valued piece of property can potentially have a very rewarding profit. It's the hardest thing people have a grasp with understanding, and I hope I've explained how that happens to you in this presentation. Tax sale properties are not ever going to be the multi-million-dollar homes you see on the late night infomercials. The properties that you guys have are where the opportunities are. So hopefully you can recognize that, and we can get moving forward on foreclosing on these properties as quickly as possible. Thank you for your time, and I have kept it to 30 minutes as promised, 28 minutes and 5 seconds to be exact. So thank you very much, and we look forward to working with you.